This is the Southside School of Financial Freedom Watchlist and Market Report for the week ending June 25th, 2022. Our question this week is, what is a recession? The answer will be provided later in the video. This week the market ended higher. The Dow Jones Industrial Average increased 2.68% on Friday and was up 5.39% for the week. The S&P 500 increased 3.06% on Friday and was up 6.45% for the week. The Nasdaq increased 3.34% on Friday and was up 7.49% for the week. Looking at the week, we can see that there were 3 down finishes versus 9 up finishes for the major indexes. The market was closed on Monday. On Tuesday and Thursday, all the major indexes finished up. On Wednesday, they all finished down. And on Friday, they all finished up again. The new unemployment claims were 229,000 versus 227,000 expected. Gold fell 0.8% on Thursday. The U.S. dollar was also down on Thursday, but the euro sunk as the dollar recovered on Friday. Also on Friday, the 10-year U.S. Treasury yield rose, but it was down for the week. The president this past week called on Congress to suspend the federal gas tax. New unemployment claims, gold falling, the U.S. dollar dropping, the euro sinking, the 10-year U.S. Treasury yield dropping for the week, and the president calling on Congress to suspend the federal gas tax are all news. And news drives the market, good and bad. Day-to-day predictions on whether the market is going to go up or down is virtually impossible because predicting the news is impossible. However, the market is rigged to go up. It does not go up every day or even every week, but the market will generally go up over time. Stock prices move in a random fashion. They go up and down with an upward drift. The market will continue to go up because the powers that be want the market to go up. While there are many powers out there, the top 5 powers that be are the Federal Reserve, big financial institutions, big corporations, the President, and Congress. These 5 entities will do what they must to drive the market higher. Now we are at our question of the week. What is a recession? A recession is a phase of the business cycle where total investment, income, employment, and demand comes down. The production of goods and services may be more, but the demand is less, and therefore prices eventually come down, which leads to a decline in the gross domestic product, or GDP. The GDP is the total of all goods and services produced in the country. A recession occurs when the GDP declines for 2 consecutive quarters. The GDP declined minus 1.5% in the first quarter of 2022. The second quarter GDP will be reported in a couple of weeks. Do you think a recession is coming? Some causes of a recession are high inflation, high deflation, a sudden economic shock, asset bubbles bursting, a stock market crash, excessive debt, advances in technology, and post-war or post-crisis, think post-pandemic, slowdowns. Indeed, some of these events have occurred or are close to occurring. Warning signs of a recession are an increase in unemployment, inverted yield curve, a rise in credit card debt, poor stock market performance, consumers losing confidence, and a drop in leading economic indicators. Again, some of these have occurred or they are close to occurring. Even if a recession is coming, there are some possible positive impacts like a lower inflation rate, a decrease in import prices, and a decrease in crude oil prices. Some negative impacts are a decline in exports, more unemployment, a decrease in GDP, and a decrease in foreign investments. Do you believe a recession is next? Are you afraid of a recession? Will your stocks decline in a recession, or have they already declined? And maybe, do you think they'll decline even further? Or do you own any stocks at all? If not, why not? Is it because you do not understand anything about the stock market? Well, it was not taught to you in school. However, if you ever want to learn how to get wealth and income through the stock market, you're going to have to teach yourself. You must RSI, that is, read, save, and invest. Formal school taught you how to read, but society and the powers that be discourages you from reading, especially books. School taught you to be a worker, they did not teach you how to be an investor. And they taught you absolutely nothing about the U.S. financial system. You can learn how to be an investor if you simply start reading books about investing. Books that you can borrow from the library for free or buy cheaply online. It is not difficult to learn how to be a passive investor, which is what most people should do. Check out this list of recommended books on the books page of the Southside website. These books and others like them will not tell you which direction the market is going to go, but you can learn how to make money in the market no matter what the market does. I don't know which way the market is going to go on a daily basis, and I don't care. I trade the market as it is, not as it should be. I take what the market gives me, whether it's going up, down, or even sideways. How do I do that? I apply the Southside strategy. You can learn more about the Southside trading strategy at SouthsideSchoolOfFinancialFreedom.com. Here is the Southside Trading Watch List from the week ending June 25th, 2022. The strongest performer on the list this week was Datadog Incorporated, ticker symbol DDOG, in the second column. It was up 6.84% on Friday and increased 25.52% for the week. Datadog Incorporated provides monitoring and analytics platform for developers, information technology operation teams, and business users in the cloud age. The company's SaaS platform integrates and automates infrastructure monitoring, application performance monitoring, log management, and security monitoring to provide real-time observability of its customers' technology. Looking at a summary of results, you can see that Datadog has decreased minus 39.66% year to date. I did not trade or generate cash flow from Datadog this week, but I have traded it in the past. Whether a stock goes up or down, you can generate cash flow from it. Whether you own a stock or not, you can still generate cash flow from it using the Southside strategy. The Southside trading strategy involves trading for weekly cash flow. That is trading for income. SPY is shown at the bottom of the third column. SPY is the S&P 500 ETF. This is the benchmark I compare my trading performance to. My objective is to beat the S&P 500 index while at the same time generating cash flow. Most professional money managers do not consistently outperform the S&P 500 index. They usually lose and lose badly to the index. Thus, most investors and traders should just invest in or trade a market index fund or ETF like SPY. What do you do? Do you beat the S&P 500 index? Do you have a watch list? What is your investing and or trading strategy? How well do you do against the S&P 500 index ETF SPY? Let me know in the comments section. Are you willing to share your strategy? The Southside Portfolio cash flow system is not outperforming the S&P 500 index ETF SPY. The Southside Portfolio is down minus 23.24% versus minus 17.87% down for SPY, a difference of minus 5.36%. the Southside is losing to SPY by almost 5.5%. The cash flow generated by the Southside cash flow system for this week was 4.51% of the portfolio account value. The account value changed by minus 1.5%. Meanwhile, the S&P 500 ETF SPY changed by 6.62%. Bitcoin Watch. Bitcoin gained almost 12% this past week, but it continues to be in a bear market. It has lost almost 70% of value from its all-time high. I sold option contracts on one position this week. It was a call that ranged from $0.00 to $216.70. You can get more details, including the total dollar amount of cash flow for the week, on the website southsideschooloffinancialfreedom.com. Check out past videos for other questions of the week. They are listed in the description section. In the meanwhile, please like, share, and subscribe.